Ladies and gentlemen, what is going on? It is your man Z Moose coming at you live with tonight's evening review, also known as Where Do We Go From Here? I'm going to go through 5 time frames this evening. We're going to go through the 233 tick, the 2 minute, the 5 minute, the 60 minute, and the 5-year daily chart of Light Sweet Crude Oil November contract. So, the November contract is up on the 29th of October. Thus, we have 23 October days, not business days, until that expires. Let's take a look and break down what we saw today. We saw some interesting action that we can actually use to diagnose future patterns in light sweet crude oil. One of which being we had a decline, for the most part, a pretty sharp decline from about 82.70 into the 82.40 range after the crude inventory numbers came up. Let's check those out as we speak. And we saw a surplus of 3.1 million barrels. Last week's report was much better than expected, and we saw an enormous spike. You'll see that when we look at the 60-minute and take it back to last week and the week before last. Today, we saw some decline here, but then we saw froth of that decline, a lot of buying coming in through the market. We went from the low of the day of 82.42, and we did not stop until we saw 83, 10 cents above 83. We saw some good consolidation in here, in between about 83.10 and 82.90. Very, very, very interesting situation that we had from a technical perspective today, because we had a lot of technical patterns and setups, intraday setups that worked nicely. One of which was the bump and run, which is a breakout in this case, with a retrace and then a continued breakout. From here, this is somewhat of a high and tight and somewhat of a bump and run from on the 233 tick. But in any case, we consolidated and continued breaking out. We had a little bit of an inverted, I guess you would call that an inverted wedge with a resistance at 83.50. Broke out above that. We were a powerhouse today up until about New York lunchtime. Around 11:38-ish, we hit high of the day, 84.09. Could not hold that $84 level. Barely was able to hold the $83 level into the close. We tested support 3 times after seeing a lot of these breakdowns, which also set up very nicely, especially along this descending trend line. We tested 83.10, snapped back up to 83.50, tested 83.10 again. I took a position from 83.10 to, actually it was about 83.21 to about 83.31. Saw some consolidation here. Added again. I thought we might continue that breakout off of this high and tight pattern. Bought at my first lot at 83.45. When we retested 83.35, I added that as well and rode both of those contracts up to 83.50, where I sold out. Those are the only 2 trades that I made today, and they were both very successful. I then left. I was looking at the market for maybe 30 minutes, the crude oil market for maybe 30 minutes before leaving, and I missed this entire decline from 83.60 off the breakout above 83.50 all the way back down to 83.10, a 50 tick move, $500 on one contract. So that was the 233 tick. Reviewing the intraday perspective, we had a very interesting and productive intraday setup here, where a lot of technical patterns worked well, and it would have been a great day-to-day trade. If we take a look and kind of consolidate that 233 tick, and we're looking at the 2 minute, you see the exact same things, only you see it in a little bit more of a tighter space, because it's a shorter time frame than the 233 tick, which shows more ticks. The 2 minute, if you can see, would probably have given us, the 233 would have confirmed a lot of our trades on these little swing trades, but for the most part, the 2 minute tick would have probably been able to, if you were trading it today, would have probably been able to have you hold a longer. Here was a great basing pattern, and this entire run, where most of the volume came in, lasted about an hour and 20 minutes.